Hi, good morning everybody. Well, the selling for our market seems to continue as Nifty Future loses close to 1% in yesterday's trade. This is the hourly chart of Nifty Future, which shows that the downtrend for the index continues further. Though the RSI indicator is holding above the 30 mark and the prices continue to make a lower low and RSI does not, which suggests that momentum is not backing this current sell-off, but in terms of price, the index is actually drifting further down. Going back to the daily chart, the index at yesterday's close at 4880 trades right at our support range of 4880, 4900, which we've been mentioning. Well, supports from this falling channel as well as a confluence of Fibonacci retracement and extensions come close to that 4880 mark. The index closed right at the supports. So do we sense that the index is going to bounce back from here on? It will be too early to take a call on that, mainly because of the fact that the sell-off so far has been fairly broad-based and the momentum indicators, though oversold, continues to stay at those levels. So we'll wait, and we'll wait for a re-emergence of buying. Going back to the short-term charts, a re-emergence of buying and should take out that 49.50. The best case scenario, move above that 5k mark, which will mean that the short-term trend has actually reversed up. Till then, we sense that selling will continue, and a break below yesterday's low of 4865 will take us close to that 4800 levels. Sub 4800 levels, we sense some panic might creep in, and we have some stronger confluence of Fibonacci extensions and projections close to that 4730, 4750 range. In terms of stocks, the ones which actually held out as the main drag for yesterday's sell-off was Reliance Industries. The stock lost over 2%, but the most important thing was the fact with this recent sell-off, the stock has actually made a low of the year and actually moved below its Jan lows. This entire Jan Feb rally that the stock had seen has now completely given back, and the stock continues to drag further down. This is a weekly chart of Reliance Industries, and we sense that a possible test of 620, 640 is very much on the cards for this stock. If this pans out, then we sense that the Nifty might as well break below yesterday's lows. Banking stocks, which we mentioned in our yesterday's report, that the erstwhile stronger stocks like an HDFC Bank is actually showing weakness, and it was one of the biggest losers within the banking sector in yesterday's trade. The stock is back to its March lows. The trend has definitely moved down. It's been a nice trend line breakdown. It's holding above that 38.2 retracement, which should hold for the time being, but we sense that looking into the bank Nifty chart as well, we sense that the banking stocks are still under some pressure, and any short-term bounce back might be looked into an opportunity to sell into. Tata Motors is the other large cap stock we want to talk about today. The stock is within a 3-day range, and the range support comes in close to that 287, 285 mark. It's been one of the most strongest auto stock, or one of the most strongest Nifty 50 stocks, which made a life high. But yes, the short-term trend has moved down, and it suggests the fact that a break below yesterday's low of 285 can actually see a possible retest of the 260, 265 support range, which had held the stock up since all the way through Feb and March. Net, we sense that Nifty is still in a downtrend, though still at our supports. Right now at our supports, we'll wait for a move above 49.40 from a short-term point of view to initiate any contrarian long trade. An extension of the downtrend is a possibility, though we are down 8% from the previous swing high of 5300. It can actually has the possibility potential to further drift down for a test of 4800. The trend is still down, and it makes sense to stay with the trend so far. You have an excellent day of trade well. Thank you.